Late last year, it looked like the beaten-down regional banks were finally making a major comeback. After the series of bank failures last spring, this group became absolutely despised.
They know nothing!
As investors worried about their underwater bond portfolios. The regional banks didn't really recover until the last 2 months of the year after long-term interest rates peaked. But they recovered rapidly. From late October through the end of December, the KBW Regional Banking Index, the key index, was up 37%. Although it still finished 2023 down 4%. Unfortunately, the group's going cold again in 2024. Longer-term treasuries have gone down in price and up in yield. But I think this could be just the pullback we've been waiting for. We're in a world where long rates have peaked and the Fed's likely to cut short rates, albeit not as much as Wall Street might want. That's good news for the regional banks here, especially since the economy's holding up just fine. But you need to be selective, which is why it's worth going over what the regional banks had to say when they reported this week. Things got going slowly with a few reports on Tuesday and Wednesday that were either negative catalysts or non-factors. The Pittsburgh-based PNC Financial reported an okay quarter on Tuesday. I candidly expected more, but their guidance wasn't particularly encouraging. Given that PNC has been a huge winner when the regionals were rallying, the stock pulled back in response to the report, but after a nice gain today, it's roughly flat for the week. While I don't think PNC will hurt you, it's not my favorite. On Wednesday morning, we heard from U.S. Bancorp, which is larger than a regional bank, but a lot smaller than the big money centers. And it gave us a similarly meh set of numbers, quarter paired with a guarded outlook for 2024. I don't want that. Management said they expect positive operating leverage, meaning improved profitability, but not until the second half of the year. U.S. Bancorp stock had rallied 50% from late October to its highs in mid-December, but it's pulled back hard in the new year. Today was actually the first time it was up in 8 sessions.
Don't miss a second of Mad Money. Follow @Jim Cramer on X. Have a question? Tweet Cramer. #MadMentions. Send Jim an email to madmoney@cnbc.com or give us a call at 1-800-743-CNBC. Miss something? Head to madmoney.cnbc.com.